What's going on, guys? Welcome back to my YouTube channel. In today's video, I'm going to do a quick trade recap of a Euro USD trade that I took last week. Before we dive into it, let me show you proof that I actually took the trade. It's the last one on the list. Euro USD sell 18. It was about $6,500 profit, and this was done using the exact trading strategy taught on the YouTube channel for free. Let's get into it. All right, so we're starting off on the 4-hour time frame as usual. Now, the whole trade idea began by identifying this 4-hour order block, which is back here, this bullish candle that was responsible for this massive break of structure to the downside. So as you can see, price already tapped into that order block quite some time ago and traded to the downside with significant momentum, but it's now come back into that order block. So technically the order block is still valid until price breaks well above it. So we can see that this high was formed here and price is struggling to break through that high so far. So that means the order block is still valid and we can still potentially look for short positions. So let's drop down to the 15-minute time frame and see what was really going on within this range here. All right, so we're now on the 15-minute time frame. To the left, you can see that 4-hour order block just for reference, and you can see that we've tapped into that 4-hour order block. Now, once again, we have tapped in, formed a high right here, and price is failing to actually break through that high, and now we're seeing bearish order flow. So that's a sign that we could enter short positions if the proper criteria presents itself. So first things first, we start breaking to the downside. We see a liquidity grab here because we had a high formed here, broke to the downside, came back up and purged that high right there with that wick, and then broke to the downside once again, creating this break of structure. Let me zoom in a bit more so we can get a clearer picture. So we have the liquidity grab, break of structure to the downside, pulls back, doesn't quite tap into our order block, right? This is our 15-minute order block that was responsible for this break of structure. We push to the downside again, not really a significant break of structure here, more so a liquidity grab, and then we push back to the upside, create a relative equal high here. So this is another form of liquidity, just liquidity forming all over the place here, while there is an unmitigated 15-minute order block. So that's a good sign that our order block is high probability. There's liquidity forming all over the place around it. Consolidate a bit more, push back up into the order block. That's when my sell limit order was triggered, right? I set a sell limit for the low of this order block. My stop loss was just at the high of this candle that previously purged liquidity from this high here. And in terms of take profit, I was simply targeting the recent swing low right here, which is represented by this SSL, which stands for sell side liquidity, because there's of course sell stops below this low, which represents liquidity, okay? So very straightforward, pretty modest risk reward ratio at 3.41, but it was a Friday. I wasn't trying to target too many pips here. Wasn't trying to be too bold with my take profit. I just wanted a quick in and out. And within 4 candles, it hit the take profit on the 15-minute time frame. And it actually went down quite a bit lower. But again, it was end of day Friday when all of this occurred. So I'm happy to be not a part of that. This was just an intraday trade for me and it worked out very nicely. So do what you need to do with this information here. Screenshot it if you want, take notes, replay this video, and stay tuned for the next trade example.